video, I am going to share with you what happened in the latest Singapore T-bill auction and why it matters for your investment decisions. Let's get into it. Hey friends, welcome back to the channel. I am Iggy here, and I've been covering topics such as stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 800,000 reads. I've covered over 600 videos and reached more than 280,000 watch hours as of November 2024. The latest 6-month Singapore T-bill auction on December 5th showed some fascinating trends. The cutoff yield dropped to 3.0%, down from 3.08% in the November 21st auction. This marks the first decline after 2 consecutive increases. Let me explain why this matters to you as an investor. Before we dive deeper, let's take a quick refresh on T-bills. These are short-term government securities issued by the Monetary Authority of Singapore. They work as a way for the government to borrow money from the public. Think of them as lending money to the government for a fixed period, and in return you get interest. Recently, we witnessed a remarkable surge in demand for these short-term government securities. The total applications for T-bills reached an impressive $17.4 billion, making it the second highest this year, just shy of this $18.0 billion seen in the August 1st auction. This overwhelming response tells us something crucial about investor sentiment in our little red dot. It's clear that investors are seeking safer havens for their money, and T-bills, with their low risk and liquidity, are becoming increasingly attractive. In fact, did you know that T-bills are considered to be among the safest investments in Singapore, with the government guaranteeing the principal amount? Now, let's take a closer look at the bidding process. Competitive bids skyrocketed to $15 billion, up from $11.7 billion in the previous auction. If you placed a bid below 3%, you got full allocation, which is great news for those who acted quickly. However, if you bid exactly 3%, you only received about 4% allocation, which means that if you bid $10,000 at 3%, you might not get any T-bills since they come in $1,000 denominations. On the other hand, non-competitive bids also increased to $2.4 billion from $2 billion, and the good news is that all eligible non-competitive bids received full allocation. This suggests that the non-competitive route might be a safer option for retail investors who want guaranteed allocation. My fellow investors, let's take a closer look at the latest Treasury bill issuance in Singapore. The government slightly increased the T-bill issuance to $7.1 billion, up from $7.00 billion in the previous round. But what's really interesting is the overwhelming response from investors, with total applications reaching a whopping $17.4 billion. This resulted in a bid-to-cover ratio of 2.45x, indicating incredibly strong investor appetite. In fact, this is nearly matching the August peak of 2.65x, which tells us that investors are still hungry for low-risk investments. As I always say, it's essential to keep an eye on market sentiment, and this latest development shows that investors are cautious yet eager to park their money in safer assets. Now let's dive into the bidding details. The median yield of bids fell to 2.9%, while the average yield dipped to 2.73%. This downward trend aligns with recent movements in U.S. and Singapore government bond yields. Many savvy investors placed bids between 2.9% and 3%, which is just above the CPF break-even yield and close to the best fixed deposit rates in Singapore. This tells us that investors are being cautious and seeking returns that are at least on par with what they can get from other low-risk investments. As your friendly investing iguana, I always emphasize the importance of understanding the market context and making informed decisions. Let's talk about how Treasury bills stack up against other popular investment options in Singapore. When we compare T-bills to fixed deposits, we can see that current T-bill yields still outperform many fixed deposit rates offered by local banks. Sure, some banks might offer promotional rates that come close, but T-bills have 2 major advantages: better liquidity and the backing of the Singapore government. Think about it. With T-bills, you can easily sell them on the market if you need access to your money quickly, whereas fixed deposits often come with penalties for early withdrawal. Plus, the government guarantee gives you an added layer of security. So, if you're looking for a low-risk investment with decent returns, T-bills are definitely worth considering. Now, let's pit T-bills against another popular investment option, Singapore savings bonds. While Singapore savings bonds offer more flexibility with their monthly redemption option, T-bills currently provide higher short-term yields. This makes them super attractive for investors who have specific 6-month investment horizons. For example, if you know you'll need some cash in 6 months for a big purchase or expense, T-bills can be a great way to park your money and earn some interest. Plus, with T-bills, you can be sure of getting your principal back, which is always a nice bonus. Of course, Singapore savings bonds have their own advantages, but if you're looking for a higher return over a shorter period, T-bills might be the way to go. With the current T-bill yields above 2.5%, they become an attractive option compared to the base CPF ordinary account rate. I mean, who doesn't want to earn a higher return on their retirement savings, right? However, it's essential to remember to factor in the transaction costs when investing in T-bills using your CPF funds. These costs can eat into your returns, so make sure you understand what you're getting into. As a general rule, it's crucial to consider all the fees involved in any investment, not just the headline yield. By doing your due diligence, you can make informed decisions that align with your financial goals. Now let's switch gears to a cash investment approach. If you're investing cash, I recommend considering a split strategy between competitive and non-competitive bids. This approach might help you secure some allocation while trying for higher yields. Think of it like hedging your bets. By splitting your investment, you can reduce your risk and increase your chances of getting a better return. Non-competitive bids, in particular, can be a great way to get guaranteed allocation, albeit at a lower yield. Meanwhile, competitive bids offer the potential for higher returns, but with the risk of not getting allocated. By spreading your investment across both, you can find a balance that works for you. My fellow investors, let's take a step back and look at the bigger picture. The falling yields we're seeing might be a signal that the market is expecting potential interest rate cuts in 2024. Now, I know what you're thinking. What does this have to do with me? Well, my friends, the U.S. Federal Reserve's decisions will likely have a ripple effect on future T-bill yields in Singapore. As investors, it's essential to keep an eye on these global factors as they can impact our investment planning. Remember, interest rates are a key driver of market sentiment, and understanding where they're headed can help us make more informed decisions. So stay tuned for updates from the U.S. Federal Reserve, and let's see how their decisions might shape the market landscape. Now let's talk about some practical tips for future T-bill applications. First and foremost, start your application process early to avoid any last-minute technical issues. Trust me, you don't want to be stressing about getting your application in on time. Consider taking the non-competitive route if you want guaranteed allocation. It might not be the most exciting option, but it's a safe bet. Also, keep an eye on market trends before deciding on your bid price. Don't be afraid to adjust your strategy based on what's happening in the market. And finally, remember to keep some funds liquid for other investment opportunities. You never know when a better deal might come along, and you want to be ready to pounce. Let's talk about some practical tips for future T-bill applications. First and foremost, start your application process early to avoid any last-minute technical issues. Trust me, you don't want to be stressing about getting your application in on time. Consider taking the non-competitive route if you want guaranteed allocation. It might not be the most exciting option, but it's a safe bet. Also, keep an eye on market trends before deciding on your bid price. Don't be afraid to adjust your strategy based on what's happening in the market. And finally, remember to keep some funds liquid for other investment opportunities. You never know when a better deal might come along, and you want to be ready to pounce. Now, let's think about what this means for your portfolio. The strong demand for T-bills shows that they remain an attractive option for Singapore investors, and for good reason. The yields still beat most fixed deposit rates, making them a solid choice for short-term investments. The high application numbers suggest that many investors see value at these levels, and I tend to agree. However, it's essential to remember that even low-risk investments like T-bills can be affected by changes in interest rates. So, don't put all your eggs in one basket. Consider diversifying across different T-bill tenures and other investment products. This helps manage reinvestment risk when rates change. As you look ahead, keep an eye out for signs of changing interest rate environments. The current yield trends might suggest that we're near the peak of this interest rate cycle, which could affect your reinvestment strategies for maturing T-bills. If you guys enjoyed this video, you're going to love my analysis of maturing T-bills, a 15B REIT opportunity, where I break down how these maturing T-bills might create exciting opportunities in the REIT market. Click the link above to learn more about this potential investment strategy. If you guys enjoyed this video, you're going to love my analysis of maturing T-bills, a 15B REIT opportunity, where I